Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was. A wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a week of big bank results, new COVID-19 cases, economic froth and bubble, and soaring commodity prices. The week started on a bit of a downer after US markets fell last weekend, spooked by the prospect of inflation. It really is the elephant in the room at the moment. Investors are worried about prices rising much more than central banks are predicting. It's triggered a jump in gold prices, which shifted back above $1,800 an ounce this week. Cryptocurrencies, including Ethereum and Dogecoin, which actually started as a joke, have surged. Not helping the uncertainty this week were comments by US Treasury Secretary Janet Yellen, who used to run the Federal Reserve. Ms. Yellen said that rates may have to rise because of inflation. She quickly corrected herself, saying it wasn't her place to tell the US central bank what to do at all, but the damage had been done. Similarly, legendary investor Warren Buffett said his company, Berkshire Hathaway, was being hit by inflationary pressures. Berkshire was passing them on to consumers who were happy to pay the higher prices. Still, Wall Street trundled along pretty well during the week and all the major indices are trading near record highs. European markets have also done well. London's FTSE is near 14-month highs. France's bourse is at a 20-year high. Locally, the S&P ASX 200 just can't seem to quite break through the levels of last February. The tech stocks are the ones weighing on the market most. Afterpay and Zipco both had bad weeks on the back of an announcement by PayPal that it would start its own buy now, pay later product in Australia in the next couple of months. There were huge gyrations in the share prices of data group Appen and aerial mapping company Nearmap, the latter because of a lawsuit filed against it in the US. Commodity prices are a treat at the moment. Copper is at an all-time high. That's helped BHP and Fortescue Metals this week. Iron ore prices pushed beyond $200 a tonne, bringing a smile not just to the faces of the CEOs of the big miners, but also to Federal Treasurer Josh Frydenberg, who delivers the federal budget on Tuesday night and knows higher iron ore prices means a better bottom line. As I mentioned, gold appreciated over the week and wheat prices are trading at 7-year highs. There was a bit of movement in the Aussie dollar, though by the end of the week it was sitting pretty much the same place it started. Initially, the US dollar appreciated on good economic news, sending the Aussie lower. Then it climbed back before a spat between Beijing and Canberra, more of that in a moment, sent it tumbling down 0.5 cent. And now it's back to the mid to high 77 US cent range. It was a week in which China suspended indefinitely regular dialogue with Australia on economic issues, as relations between the two countries deteriorated further. The escalation of tensions comes after the federal government decided to review the 99-year lease at the port of Darwin to a Chinese-owned company, and follows Canberra's decision to veto a so-called Belt and Road initiative whereby Chinese money was helping Victoria build infrastructure. Not helping also were recent comments by Defence Minister Peter Dutton and Home Affairs Secretary Mike Pezzulo, who both warned of Chinese aggression in the region. Most of the news out of Canberra was about next week's budget or the ban on flights from India. Prime Minister Scott Morrison found himself in the middle of an almighty stoush about whether stopping flights from India was un-Australian, particularly when there's a bunch of Aussie cricketers wanting to get home. By the end of the week, the PM said flights would resume on May 15, a week's time, and travellers would go into the Howard Springs quarantine facility in the Northern Territory. The news out of India around COVID-19 just keeps getting worse, with the country now having had several days with more than 400,000 cases. It's very sad. Back home, New South Wales announced 3 community-transmitted cases of coronavirus this week from an unknown source. The Greater Sydney region had restrictions placed on it immediately by Premier Gladys Berejiklian. I was on the Gold Coast when Brisbane had an outbreak in March. Premier Anastasia Palaszczuk called for masks immediately, and within hours, everyone was wearing one. Same deal this week in New South Wales. Within hours, supermarkets and malls were full of people wearing masks. We really are a very compliant bunch, and that's a good thing when it comes to COVID-19 at least. The federal budget leaks continued all week. One of the big spending packages will be a $1.7 billion childcare package. There are also reports that the government would provide money for a new coal-fired power station in New South Wales. Next week's budget is likely to be full of money for aged care, women and health. But most analysts don't expect it to move the dial in terms of major policy initiatives. I'm guessing with an election due in the first half of 2022, the government wants to keep the big announcements till later in the year. The Reserve Bank Board met and kept the official cash rate on hold at record lows and will continue to support short-term fixed rates. It repeated it didn't expect rates to rise until 2024, but it upgraded its economic forecasts. Big time. It now expects the economy to grow at a 4.75% clip this year and 3.5% next year. That's a very solid growth rate, even after a recession. The unemployment rate is expected to fall to 5% at the end of 2021 and 4.5% next year. Inflation wasn't expected to hit 2% until the middle of 2023, even if there was a spike this current quarter as the impact of COVID-19 works through the numbers. In other economic news this week, the ANZ Job Ad Survey rose for its 11th consecutive month in April, but last month was particularly important because the employment market didn't include JobKeeper, which ended on March 28. What it shows is that the labour market is unlikely to fall sharply as a result of the ending of the government support package. New car sales jumped sharply in April. More than 92,000 units were sold, more than double a year earlier at the height of the pandemic. The Ford Ranger Ute took the title as the biggest selling vehicle, followed by the Toyota RAV4 and the Toyota Hilux Ute. And house price figures for April from CoreLogic showed the pace of growth of rises has tempered just a touch. Having said that, the pace of growth is still ridiculously high, unsustainably high, and peak housing is still about 18 months away, according to the experts. As always, plenty of corporate news around this week. Tabcorp received a new offer for its gaming, media and gaming services divisions from private equity group Apollo Global Management for $4 billion. Without the gaming services division, the offer is $3.5 billion. The chunk Apollo isn't bidding for is the jewel in the Tabcorp crown. That's the lotteries business. Rio Tinto's board was hammered in its second annual general meeting in London this week. The shareholder vote against the remuneration package of outgoing CEO Jean-Sébastien Jacques was 60% across the meetings in London and Perth. Ouch. The vote isn't binding, so Mr. Jacques, who was running the company last year when it blew up 46,000-year-old rock caves, will probably still get his payout. There was a slew of corporates updating earnings guidance during the week. I won't go through them all, but there were some pretty interesting themes. Several CEOs of major companies, Transurban, Wesfarmers, Domain and Reliance Worldwide, warned that price pressures were in the system. There was general agreement that CBDs around the country were getting back to normal, slowly, though there's still a way to go. Retail is certainly almost back to where it was, and travel was also picking up, but there's a way to go. That's the thumbnail sketch. If you want to hear more about Super Retail Group, Nine Entertainment, Ampol, Flight Centre, Star Entertainment, JB Hi-Fi, Seek, News Corp, Domain, QBE, CSL, the list goes on, you're going to have to listen to this week's episodes of Fear and Greed. And here's a hint, focus on Wednesday and Thursday. And finally, Domino's wants to keep taking over the world. The pizza joint now has 2,900 stores, and this week it said it wants to hit 5,550 in the next decade. Its share price is up 100% during the past year. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was the big bank results. Westpac, ANZ and National Australia Bank announced half-year results to the end of March. Combined, the three made close to $10 billion. That's more than twice as much as the pandemic hit half of 12 months ago, though not back to the glory days of 2017. All three significantly lifted payouts to shareholders. Along with Commonwealth Bank, they make up 4 of the largest 6 companies on the ASX. Most of us are shareholders through our super funds. Love them or hate them, the economy is better off when they're performing well. And this week we found out that the big banks are back. Big time. Also in this category is Macquarie Bank's handy result. For the 6 months to the end of March, Macquarie Group booked a record profit of $3 billion. What a cracker. It also pledged to transform into a net zero emissions company by 2025. The sleeper story of the week was the decision by the corporate regulator to sue Westpac. Okay, maybe calling it a sleeper story is a bit of a misnomer because it got plenty of attention in the business media. But this story is huge. The Australian Securities and Investments Commission alleges Westpac was inside trading on interest rate products. Inside trading. Think of all the movies you see about how much money people have made from inside trading, and then they go to jail. Westpac denies the allegations, and they have to be tested, obviously, innocent till proven guilty. But just the fact that ASIC is prepared to allege insider trading on a big bank is pretty noteworthy. The most remarkable story is that of Bill and Melinda Gates divorcing. Splitting up isn't the remarkable part. It's the amount of money they give away that's emerged as a result of the divorce proceedings. I wish both of them well. Divorce is crappy. Full stop. But I hope the $65 billion endowment keeps getting handed out to help the world become a better place. There are millions of malaria patients and COVID-19 cases. Thankful to Bill and Melinda Gates. Long may that continue. And my favourite story this week was all about airfare wars. They're back, and that means we consumers pay less for travel, particularly between major centres like Sydney and Melbourne. The airlines are falling over themselves to convince customers to fly with them. Virgin was talking about including luggage in cheap flights. Regional Express highlighted that it serves snacks, not just tea and coffee. I love cheap airfares. And that's everything you need to know from the last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.